It's still in the conversation because of the strong brand recognition, the real world retail presence through toys and partnerships, the community culture around the penguins, and the simple fact that NFT linked tokens with mainstream brand ambitions continue to cycle in and out of attention. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on Pengu. I actually read them. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to outright negative for an extended period. You'll see a mix of hold and sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets have flipped around, but the short term outlook from pure chart based sources remains defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is more coverage for Pengu than for lower ranked names because of its ranking and brand visibility, but the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. What's going on with Pudgy Penguins right now? The chart has been under pressure for a long stretch. Sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Pudgy Penguins is the official token of the Pudgy Penguins brand, a well-known NFT collection that has expanded into physical toys, retail partnerships, games, and broader consumer IP. Pengu launched on Solana as the social and economic layer connecting the ecosystem, giving holders exposure to the brand beyond just NFT ownership. It currently ranks near the top 100 by market cap, with solid daily volume, and the price has been trading near the levels you're seeing after a sharp decline from previous highs. On the technical side, the bigger picture remains a clear long-term downtrend from the much higher levels reached after launch and previous runs. Price has spent extended periods making lower highs and lower lows, with recent action testing support near multi-month levels. Short-term bounces have occurred but have consistently failed to reverse the larger structure. Momentum indicators have been mixed to weak on the higher timeframes, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the daily and weekly still lean bearish, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is some resilience when price holds the recent lows, but the overall structure still looks heavy. Here's the real debate. Is Pengu actually undervalued at these levels, or is this a value trap after a large post-run decline? One side points to the established NFT brand, the expansion into physical products and retail, the large community, the distance from previous highs, and the idea that tokenized cultural brands could re-rate if attention returns to NFT and consumer IP narratives. They argue that if the brand continues to grow mainstream reach and the token remains central to the ecosystem, these levels could look reasonable in hindsight. The other side says look at the chart and the market structure. Many NFT linked and brand tokens that peaked during strong cultural runs have struggled to hold value once attention faded. Volume and momentum have been soft for long stretches, and the market has consistently treated Pengu as a lower priority name despite the brand strength. That's the classic trap setup. The culture and brand are real, the community remains engaged, but the market keeps assigning it a lower valuation while attention stays elsewhere. Retail often gets caught here. Buying the brand and community will eventually matter argument, while the larger trend remains downward or sideways. Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short term bias flips with any real confidence. Longer term, it comes down to whether Pudgy Penguins can convert its brand strength and community culture into sustained demand and relative outperformance for the Pengu token. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower. Nobody knows which way this resolves. The chart is still fighting the brand narrative, the project continues to maintain mainstream visibility, and the market remains selective about which cultural tokens it rewards. So, the real question is simple. Is this the kind of project that can finally break out of its long underperformance and re-rate higher? Or are we just watching another established brand token settle into a prolonged period of low relative interest while people argue about valuation? Bull case versus bear case is fairly clear. Best case, broader market risk appetite returns to cultural and NFT linked tokens. The Pudgy brand continues to expand in retail and media. The community stays highly engaged, and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate highs over a longer horizon. Worst case is the opposite. Volume stays muted relative to peers, relative performance continues to lag, and the downtrend simply grinds lower toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform. Risks are meaningful. Volatility is still present and can be extreme for brand and meme adjacent tokens. A broader risk of move in crypto or continued rotation away from mid-cap NFT and cultural tokens can pressure the price further. Downside remains open if the recent support zone breaks and the downtrend simply continues. Retail traders love the long-term Pudgy brand expansion story and end up holding through multi-month or multi-year underperformance. Liquidity is solid relative to pure micro caps but still thinner than the very top names, so larger moves can still happen quickly. There's also the structural risk that comes with any brand linked token. The narrative has to keep generating new attention and real ecosystem usage, or the token simply fades relative to the broader market.